Good morning, everyone. It is April 17th, 2025. I'm Ben Buckner, Chief Grains Analyst with Ag Resource Company. With me is President and CEO Dan Bossy. Dan, good morning. How are you?
No, I'm really good, Ben. It's a bright, sunny day. Last trading day of the week. It's Thursday. We have off tomorrow because of the Good Friday. And though USDA and the government's open, so that CFTC data and all the goodies from USDA will still come up.
Yeah, and I think one of the big risks before we get into the market details is we do have, for the most part, 3 to 4 days in Europe where there will be no trading. And as we get into spring and summer, it's that the absence of trading is kind of the big risk to the market. So we're not sure what happens over the next 72 hours plus. But we are looking at markets that are steady to higher today. And like we mentioned yesterday, we've kind of seen this play out over and over again as we do get confirmation that U.S. corn export sales are pretty incredible. They were again last week. Even soybean export sales, not terribly robust, but are better than last year and kind of resilient in the face of everything that's happening between the U.S. and China, and of course, a record total South American crop size in 2025. So we got confirmation that the U.S. corn being cheap is still funneling demand to the U.S. The USDA probably tightens stocks again further in old crop stocks in its May WASDE. And so I think the big picture from us is that we've got to get into the growing season, and it needs to be good before the next bearish leg occurs in the ag space. But what else do you got? What else do you think about markets today?
Well, I think that's right, Ben. We'll go through a little bit of the data, but I wanted to get the 30-day outlooks just came out from National Weather Service. So if you look at this, the forecast issued today, April 17th, you can see that the monthly precipitation is equal chances of rain for the plain, above normal rain for portions, let's call it Jonesboro, all the way up to, let's say, Findlay, Ohio, and then stretching into Pennsylvania in the Northeast. That's for above normal rainfall. But this looks like a pretty good planning forecast, really. Temperatures that are near to above normal, precipitation that is equal. And so we think we're going to end up and go forward with good planning weather. Just to your point, Ben, when you go back and look at the sales this morning, and this is just giving us where we're at, you can see in this graphic, we sold 61.5 million bushels of corn, 20.4 million bushels of soybeans. As you look at both of those years, I mean, we're now 470 million bushels of soybeans above last year. And if we have to reach the USDA forecast, it's only 23 million bushels a week. So I think an export estimate of 2650 or 2.7 billion bushels is right. That's going to take end stocks down quite a bit. But I also believe in soybean exports, we are now, 107 million bushels from USDA's annual forecast of 1825 being at 1719. So we're up, 13%. That's enough that USDA probably needs to raise its export estimate by, I would guess, somewhere between 25 and 40 million bushels, further tightening old crop stocks. So to your point, the old crop markets are going to tighten here. New crop has some relatively good weather, but I wouldn't look for a seasonal high till we get into the month of May. As you look at a little bit on wheat here, I did want to make mention that global wheat trade has been down. You can see that in your chart to your left here. But now, as you look at the year ahead, we think that global wheat trade will recover. I say that only because if you look at past data, we've only had years that when you have this kind of break in world wheat trade, notice in the next year, it always comes back. So I'm optimistic that world wheat trade will be better next year. And then if you think forward in terms of, where we're looking at opportunities, I would say that, Russia is a key place of following here. And the big thing that people forget about Russia is that plantings will be down 900,000 hectares from last year. They didn't get the crop in very well. So we use a yield of 3.05. That gives you a crop in Russia of 82. I think for today, that's about right. Carrion will be up just a little bit, relatively speaking, because of slower old crops. But notice that 42.5 million metric tons, the export estimate for Russia is about the same as this year. So if there are any weather problems in Russia or the Black Sea, they get amplified. And we'll finally finish up, Ben, with, if we look at the CFTC futures and options, KC, Chicago, Minneapolis, and Matif, that's that Paris wheat contract. We're short 450,000 contracts a wheat. Boy, that's a mountain. So somewhere along the line, I think there'll be a weather rally relative to wheat. It's grown in too many places in the world, and I can't imagine all these funds are going to hold in that position, Ben. So back to you. That's a little bit of ideas of what we're seeing here today.
That makes sense. Yeah, even from our price models, it does seem like the wheat markets assuming weather goes swimmingly everywhere for the next 90 days or so, and what are the odds that happens? I'd say pretty low. There's probably going to be a problem somewhere. And to your point, I mean, it's not going to rain much in the Black Sea. And even our contacts there, who were very optimistic 2 weeks ago because they got some rains, are now kind of sounding alarm bells that maybe 1 week of dryness is fine. 2 weeks you start to see stress. I don't think Russia's footprint on the world market is going to be as large as it was 2 and 3 years ago. And I think that's a big deal for wheat generally. Will Russia produce 100 million tons or 80 million tons? That's the discrepancy I think that we're looking at. As we wrap up, do you have anything to touch on the macro markets? It does seem like the equity markets are fluctuating. The Dow's down, the S&P is up, but we've got, I still think, maybe some headwinds, uncertainty certainly ahead of us.
I mean, Ben, there's all this talk about maybe the U.S. and China getting in evidence that that's a case, reflecting that this trade between the two large economies in the world is likely to worsen. And I really believe that the Chinese and the United States are a long ways from doing any kind of trade deal. So we'll pivot to Japan, we'll pivot to some other countries, but unless we get the U.S. and China in a trade deal, longer term, there's going to be a bearish pull on ag prices. But that's probably, to your point, after the June timeframe, we start to look at where U.S. crops are and where we are in terms of world production. That drag will play out in the new crop position on exports for October, November, December, January on soybeans, and the same time frame for corn.
Yeah, I think and of course, trade deals, the timing must be measured in years, maybe not days and weeks. So
Yeah.
Here we go. We're entering a sort of long holiday weekend. We're all going to have to stay tuned to the news, even as markets are closed. But we wish you all the best in trading and marketing today, and we'll see you on Monday. So thanks for watching.
Happy Easter, everyone.